Welcome to TaxZone by Ganges. Welcome to this presentation on the Electronic Invoicing System, its applicability, key implementation phases, and compliance obligation in UAE are explained here. Application of the Electronic Invoicing System. The Electronic Invoicing System applies to every person conducting business in the UAE. All business transactions are required to be invoiced electronically through the system unless they are specifically excluded under the decision. Excluded transactions and overview. Certain categories of transactions and persons are excluded from e-invoicing. These include government entities acting in a sovereign capacity, international passenger transport by airlines with an electronic ticket, ancillary airline services covered by an electronic miscellaneous document, international air transport of goods supported by an airway bill, exempt or zero-rated financial services under VAT, and any other transactions determined by the minister. Let's discuss excluded transactions with examples. Government entities acting in a sovereign capacity. When a government entity performs activity as part of its sovereign role, not competing with the private sector, such transactions are excluded. For example, the Ministry of Interior issuing a passport or the RTA issuing a driving license. These are sovereign functions, not business activities. International passenger transport by airline with electronic ticket. Airline services of international passenger travel are excluded if an electronic ticket is issued. Example, Emirates Airlines issues an electronic ticket for a Dubai-London flight. This ticket acts as a documentation, no separate e-invoice needed. Ancillary passenger services linked to the above, supported by an electronic miscellaneous document. That is, services directly provided by airlines to passengers, ancillary to the international travel, are excluded if covered by electronic miscellaneous document. For example, excess baggage or in-flight Wi-Fi purchased for an international flight documented via an electronic miscellaneous document. International air transport of goods airway bill issued. International goods transport by air is excluded if supported by an airway bill. This exclusion applies only for 24 months from the system's effective date. For example, Emirates Sky Cargo issues an airway bill for shipping goods from Dubai to Frankfurt, excluded from e-invoicing for 24 months. Next, exempt or zero-rated financial services under VAT. Financial services exempt or zero-rated under Article 42 of the VAT Executive Regulation are excluded. For example, a bank providing interest-bearing loans or a zero-rated export of financial services, no e-invoice is required. Any other transaction determined by the minister. The minister may specifically additionally transactions as excluded through a separate decision. For example, future ministerial decisions could exempt specific industries such as government-backed insurance schemes, etc. Accredited Service Provider, ASP. Who is an ASP? An ASP is a government-approved company or software platform that helps businesses create, send, and manage electronic invoices in compliance with all technical and legal requirements. If your business is covered by the e-invoicing system, you cannot simply email a PDF invoice to your customer. You must use an approved e-invoicing solution, an accredited provider that connects directly with the government system and ensures your invoice are valid and reported properly. In case of any change in the registered business information, such as business name, address, license, or authorized signatory, must first be reported to the federal tax authorities. Once the FDA approves and confirms the change, the business must inform its appointed accredited service provider in writing within 5 business days. Next, we move on to the e-invoicing obligations. Exchange and reporting obligation. The issuer must issue and send an electronic invoice for every business transaction. Must issue an electronic credit note if a transaction is cancelled, price is reduced, refund is made full or partial, or an error occurs. The recipient must process these documents through the e-invoicing system. If the issuer is a VAT registered, invoices must be issued within VAT law timelines. Generally, invoices and credit notes must be issued and transmitted within 14 days from the transaction date. Both parties must report the documents to the Federal Tax Authority as per timelines set by the minister. All obligations must be fulfilled through an accredited service provider. For example, a trading company sells goods on 1st May. It must issue and transmit an e-invoice to the buyer by 15th May through its ASP. If the goods are returned, an e-credit note must be issued for the refund. Next, data fields. Every e-invoice and e-credit note must contain all required data fields like supplier name, TRN, date, VAT amount, etc. as prescribed by the ministry. The example, the e-invoice issued by ABC Traders LLC must include the supplier's TRN, invoice number, VAT rate, and total amount as required by the ministry's format. In case of an agent can issue and send e-invoice or credit notes on behalf of the principal using the electronic invoicing system. For example, a real estate broker issues an e-invoice on behalf of the property owner for rent collection. In case of self-billing arrangement, the recipient can issue an e-invoice or e-credit note on behalf of the issuer if both are VAT registered and conditions under VAT executive regulation or minister's decisions are met. For example, a retailer recipient issues an e-invoice to itself on behalf of a supplier issuer when purchasing agriculture goods under a self-billing agreement. A recycling company recipient purchases scrap material from the supplier issuer and issues an e-invoice on behalf of the supplier under a self-billing arrangement. Next, we'll move on to data storage. All e-invoices, credit notes, and related data must be stored within the UAE for a period specified under the tax procedures law, usually 5 years. Example, a company must retain all e-invoice record within UAE server for at least 5 years from the end of the tax period. In case of system failures, if there is any system failure, the issuer or recipient must notify the FTA within 2 business days through the prescribed mechanism. If the company's invoicing portal crashes on 1st June, it must inform FTA by 3rd June using the FTA's online notification process. Next, we move on to scope and pilot program. Scope of application. The decision applies to any person subject to the electronic invoicing system in the UAE. Any person voluntarily implementing the system. Any other person designated by the ministry. Example, a VAT registered trading company in Dubai is automatically covered. A small consulting company can voluntarily adopt the e-invoicing system. Next, we move on to the pilot program. The ministry will notify selected person for inclusion in the taxpayer working group. Participation is voluntary and requires written consent. Participant must meet technical standards set by the ministry and FTA. The pilot program starts on 1st July 2026. For example, a large retailer agrees in writing to join the pilot program in July 2026 and tests e-invoicing connectivity with the FTA system. Voluntary implementation. From 1st July 2026, any person may voluntarily implement the e-invoicing system provided they meet all the technical and reporting requirements set by the ministry and FTA. For example, a mid-sized manufacturer chooses to go live with e-invoicing in August 2026, even though it is not yet mandatory. Next, we move on to the important part, phased rollout and deadlines for e-invoicing. The UAE has adopted a phased rollout for mandatory implementation. Phase 1 applies to persons with annual revenue of 50 million dirhams or more. They must appoint an accredited service provider by 31st July 2026 and go live on 1st January 2027. Phase 2 covers persons with revenue below 50 million dirhams. They must appoint their service provider by 31st March 2027 and go live on 1st July 2027. Phase 3 includes government entities. Their deadline to appoint an ASP is also 31st March 2027, but their go-live date is on 1st October 2027. Phase 4 applies to all remaining persons as and when announced by the ministry. B2C, business to consumer transactions, are currently excluded from the e-invoicing system until further notice by the ministry. All covered businesses must complete onboarding and meet the technical and procedural requirements set by the ministry and the Federal Tax Authority to ensure full compliance. The electronic invoicing system represents a major step in the UAE's journey towards transparency, efficiency, and digital tax compliance. By adopting e-invoicing, businesses not only meet regulatory obligations but also move towards smarter, paperless operations that support the UAE's digital economy. Thank you.